Unexpected IRS deposits, what you need to know. Thousands of Americans have recently discovered an unexpected deposit of $9,700 in their bank accounts, raising concerns and speculation. However, contrary to initial suspicions, this is not a scam. The IRS has confirmed that this occurrence results from an internal processing error. Even more surprising, the Treasury Department has announced that recipients will not be required to return the funds. This article delves into the details of the situation, eligibility criteria, and recommended actions for those affected. Background and causes. On February 28th, reports emerged of individuals receiving unanticipated IRS deposits. Initially met with skepticism, these transactions were later verified as legitimate payments stemming from a processing malfunction in the IRS's stimulus distribution system. According to publicly released internal documents, a critical software glitch occurred during the batch processing of economic relief payments. This error caused approximately 340,000 approved stimulus payments to be duplicated, affecting individuals and families who had initially received their payments through direct deposit between February 15th and February 22nd. As a result, many qualified recipients received double their intended stimulus amount, leading to widespread confusion. Government response. In an unprecedented move, the Treasury Department has decided against reclaiming the mistakenly issued funds. Treasury Secretary Janet Anderson stated in a recent press briefing that due to the administrative costs associated with retrieving these payments, coupled with ongoing economic hardships, the government has opted not to pursue reimbursement. Furthermore, these duplicate payments are being treated as additional economic relief, and recipients will not face tax penalties or legal repercussions for retaining the funds. Who is eligible? The duplicate payments were sent to individuals and families who qualified for the full stimulus amount based on their most recent tax filing. Specifically, this includes single filers with an adjusted gross income, AGI, under $75,000. Married couples filing jointly with an AGI under $150,000. While most recipients have already received their duplicate payments, the IRS has indicated that a small number of additional payments, approximately 15,000, are still being processed and may appear in bank accounts within 3 to 5 business days. What should you do if you receive a payment? Financial advisors recommend taking the following steps. Document the transaction, capture screenshots of the deposit, and retain any related communications for reference. Avoid immediate large purchases. Although the Treasury has confirmed that recipients may keep the funds, experts suggest waiting at least 30 days before making major financial decisions. Remain cautious of scams. Given the publicity surrounding this issue, fraudsters may attempt to exploit it. The IRS will not call, email, or text to request banking details. Be wary of any such communications. Ethical and financial considerations. While recipients are legally entitled to keep the funds, some financial experts suggest donating a portion to charities or community organizations assisting those still experiencing economic difficulties. Additionally, individuals may choose to use the money to pay down high-interest debt, build emergency savings, or invest in long-term financial security. Broader economic implications. Although the sum of $3.3 billion may seem substantial, economists assert that its macroeconomic impact will be minimal given the scale of the $25 trillion U.S. economy. Unlike previous IRS errors, such as the 1.1 million payments mistakenly sent to deceased individuals in 2020, this decision marks a departure from the standard procedure of issuing repayment notices. Analysts believe the shift may be influenced by administrative costs, public sentiment, and political considerations ahead of the upcoming midterm elections. Future outlook. This situation highlights vulnerabilities within the government's digital financial infrastructure. Experts point out that modern financial technology incorporates verification layers to prevent duplicate payments, and this incident may accelerate efforts to modernize government payment systems. Key takeaways. The duplicate $9,700 deposits resulted from a verified IRS processing error. The Treasury Department has publicly stated it will not seek reimbursement. The deposits will not incur tax penalties or impact future benefits eligibility. If you have not received a duplicate payment by March 5th, it is unlikely you will receive one. Recipients should remain cautious of scams, document their transactions, and make informed financial decisions. For those who have not received any stimulus payments despite eligibility, the IRS recommends using the Get My Payment tool or contacting their hotline at 1-800-900-1983. This unexpected event underscores the complexity of government financial systems and the importance of staying informed about economic developments that could impact personal finances. If you found this information useful, consider sharing your thoughts or experiences in the comments section below.